Hey guys, so let's talk about the dollar. This bull run is so vicious. It's just on an absolute mission to continue to the north. Now, I've spoken about this already this month, right? But I want to go into some more details on some things for you now, okay? So I'm going to show you the technicals. But before that, I want to just show you the supportive dollar factors that we're seeing fundamentally at the moment. So as you can see, supportive dollar factors we've seen this month really since we started picking up pace at the start of February, and that's because some good data points. We had ISM manufacturing PMI smashing expectations, then we saw the ISM non-manufacturing PMI beating expectations. So it just shows the buoyancy in the manufacturing industry and the non-manufacturing sectors as well. NFP, the most recent reading, a bullish 225. You know, markets love to pay attention to the headline reading of non-farms, and you know, anything above 100k, as made clear by the Federal Reserve, is good for them. It's growth. It means growth and expansion in the jobs market. We had some positive commentary from the Fed Chair Powell, okay? So he is the governor of the Central Bank of the United States, and he basically was quite upbeat about the prospects of the economy. He said about gradual reduction of the repo market. So remember, the repo market is a way of them essentially pumping money into the market somewhat, you know, a form of QE, a stimulus, which is dollar negative. So that being dollar positive, that they're talking about scaling that in at some point. And then, as I mentioned over the weekend, potential US middle class tax cuts. Okay, so that great for the economy, right? Free up some more cash for consumers to spend, go and invest potentially in stocks, to stimulate the economy, so on and so forth. A dollar positive. Then obviously dollar's been benefiting on the safe haven flows from the coronavirus, right? The US, compared to a number of its peers as an economy, is very stable, right? Look at the Eurozone, shaky. You know, Canada starting to be a little bit shaky. You know, a lot of its peers are being outweighed by the positive factor of the greenback and the economy. And then also, high interest rates are being paid in the United States. No other economy like the US is paying rates as high as it is, okay? So it's more attractive for you, for foreign investors, to put their money into the United States because of those higher interest rates. So those are all the supportive factors. Just want to note one more thing before I get onto to show you the technicals. Some risk to the bull run, okay, coming to an end. This is just a couple of things to note. Well, one thing really. The FOMC is still potentially cutting rates due to low inflation. Inflation has been low for the country for quite some time. So if they're going to act, it'll be on this, inflation being low. So keep an eye on all the relevant inflationary data points. Now, let's just bring over the dollar chart here for you. Boom. Okay, so if we take a look here, this is, as I said, with my supportive dollar points, it was actually from the 3rd of February where we started to pick up some pace to the upside. And you can see how influential these fundamental factors are. And this is why I always stay on top of those. And that's why we do it every single day. We live and breathe it at the Freak Network. We're freak traders, baby. So look, from the 3rd of February, as you can see, bounce off this decent support around 97, sort of 35, 40 region, extending to the upside. So we have actually have been pumping since the start of the year. Okay, we had this little blip there at the back end of January, somewhat of a potential fake out really, and the price then continuing to the upside. And now what I'm looking for is us to challenge these 2019 highs. Okay, this is the high of 2019, up at sort of 99, 64, 65, this area here where we peaked, and then we broke out of this ascending channel structure, this ascending wedge. So do keep an eye on that. And obviously, with that in your mind, you must think of what's heavily weighted by the Dixie. Of course, number one is going to be euro, and euro at the moment is heavily faltering. With our eyes, we've been discussing this for the past couple of weeks now, Joe and I. We're looking towards that 106, 105 area. So keep an eye on that huge pumping, guys. In terms of all of this, these fundamental themes, the technicals, we do it every day. We live and breathe that. Check us out, our membership, freaknetwork.io. Other than that, let's get it.